We have the Dr. Reddy's management with us, and we'd like to get right to that. We've got G.V. Prasad, co-chairman and CEO at Dr. Reddy's, joining us now. Good afternoon, Mr. Prasad. Thank you very much for speaking with us here on CNBC TV 18. It's been a difficult quarter, especially because your main market of North America hasn't done very well, and because Russia, you've had to face a big currency headwind. What is the outlook going forward?
Well, you're right. It's not been a great quarter, but it has not been too bad either. It's been flattish on the back of increased R&D spending, as well as lack of any major launches in the US and some price compression in the US. The results have been about a little flat. Going forward, as we launch new products, as the approvals come through, I think we should see a return to growth. All the other geographies have done well. Of course, the devaluation hit us somewhat, but we can't help an externality like that. But otherwise, all geographies have been doing reasonably well, except Europe.
Talk us through the pipeline, as well as, actually, let me put the R&D question to you first, because that's where we've seen a big move up in costs, that and SG&A. Again, talk us through both the R&D expenditure, why it's moved up, what the potential outcome of that will be, and the SG&A expense increase, if you can break that down for us as well.
So let me start with R&D. The R&D has increased due to the increased activities in all the three areas.
Okay.
The area of complex generics, including external development, where we are working on non-traditional dose forms such as topicals, patches, and complex injectables, which require not only development but also clinical endpoints or PK studies or pharmacokinetic studies. All this costs a lot of money, so we've been investing in that. The second reason is that some of our biosimilars, we've been doing trials which are required in the large markets, early stage trials, but still quite largish trials. So that has consumed some amount of investment.
Okay.
Finally, a couple of our products are entering into late phase clinical development in proprietary products, and that's also added to the R&D costs.
Can you share more detail on some of these late phase trials and what the time to market is like?
The time to market, instead of that, let me say that we should file at least one NDA before the end of this year.
Okay.
We should have another one in the next few months after that. So we're looking at filing at least 2 new drug applications in the next year or so.
But you can't talk to us about any more detail on those or what the potential of those is?
They are not very large products. As you know, that we are doing work in the area of formulation innovation in 2 therapeutic areas. One is dermatology, the other one is neurology. So the products range in peak revenues from $50 to $100 million in size at peak revenue.
Each one of them?
Each one of them, yeah.
Okay, so that's roughly $200 million thanks to those 2 NDAs between now and the end of the fiscal?
Not 200 million, somewhere in the range of 50 to 100 million per annum.
Yeah, so 200 for both between now and the end of the fiscal, right? Fair enough?
Not end of the fiscal. By end of the fiscal, we'll file at least 1 NDA.
Okay.
And a few months later, we'll file another one. Next 12 months, we should file at least 2 NDAs.
All right, fine. So SG&A expense, what is this? Most of it is marketing, or is it also because of wages?
It's SG&A is primarily wages. Otherwise, it's been relatively flat.
I would imagine it's a one-time thing then?
What do you think? You mean the R&D cost or
the SG&A?
No, the SG&A will remain at this level. I don't think it's the annual inflation of wages and certain other costs.
Okay. Besides the R&D pipeline, is there anything else that you can talk us through in terms of pipeline and what we can expect in the months to come in terms of revenue boosters?
I think it's largely going to be driven by the unfolding of the U.S. pipeline.
Okay.
There has been a backlog at the U.S. FDA, and we are awaiting approvals. Approvals are not coming as fast as we anticipated, and hence we are seeing some challenges in that market.
So you're awaiting how many approvals at this stage, and do you have any sort of even a broad estimate of when you think some of those approvals might come through?
I don't want to speculate on that.
Okay. Let's talk a little bit about some of your other markets besides just North America. How are you seeing Europe and as well as India, what the outlook is?
So in India, I think we have grown higher than the market, I think around 14%. we are quite happy that in spite of the NLEM and all of that, we are maintaining growth. Growth is largely driven by volume growth and some new launches. So I think we are optimistic about India. The other market which has been a very positive surprise is Venezuela. I think the market has a lot of challenges in terms of currency, in terms of the volatility there, and the political environment. So we see a lot of the competition not sustaining their presence there. As a company, we are committed to this market, and as a result, we are seeing very good growth there. In fact, this year we grew by over 100%. I think we in the first 6 months we actually grew more than the whole of last year. So
but it's a very small market, right? So I mean,
I think it is sizable. It is.
How big is the Venezuelan market, sir?
For us, I think it will cross $100 million this year. I mean, overall.
And it can sustain 80 to 100% growth levels for the next few years to come?
I wouldn't say that. I think the economy is in a significant transition, and that has posed challenges as well as opportunities to those who stay committed. The growth rate will be high, but not at this level. This is not a sustainable growth rate. But I think the sales should sustain at this level.
Okay. Since we're talking geographies, will you also comment on Europe, which has maybe not been as strong as you would have liked?
Europe has been not a very strong point for us. Right. It is continuing to decline. I don't see a lot of optimism there. Unless, the pipeline of special projects of differentiated assets come out, and I don't see that happening in the next few months.
So if my information is correct, sir, both the global generics business was down 19% year-on-year in Europe, and the PSAI segment was down 37% in Europe, and you expect these declines to continue from here on?
No, I don't expect the declines to continue at this level. Actually, the API business will turn around in the second half, and it should show significant growth. But the generics part of the business is not going to grow in the short term.
Okay, non-geography wise, on an overall cumulative basis, global generics was up 8.7%, your API business was up 6%, correct?
Yes, yes.
You expect that this will be the growth rate to be maintained over the next few quarters, sir?
I would expect the growth to increase, not actually.
Substantially? If you can give me a qualitative assessment of whether you expect the next 2 quarters will be better.
It will be better than the last 2 quarters.
Much better, little better, somewhat better?
That's all. I don't want to qualify it in that way.
Okay. You've also entered into an agreement with Novartis to buy rights to a nicotine therapy drug, which is Albuterol, if I've said it correctly. Yes. Is this going to be a big product?
It's a modest size. It's not a very big product. But it's an important aspect of the OTC market. We also see that smoking cessation as a category is growing. And with Obamacare giving reasonable incentives to people to give up smoking, I think we see a growth in this market. And so it was a good opportunity for us.
How big is the size? Because you're still awaiting FTC approval, aren't you? So it's not yet a in-sale product.
Yeah, it's not yet. The transaction has not closed. We are awaiting FTC approval.
So can you when you said, give us a sense of what size of market this product has? Or?
I don't have the exact numbers, but it's in the region of $50 million.
Okay, fine. All right. So that gives us a sense of where it will be. A quick detailed question on tax. You had a higher tax outflow in the quarter gone by, higher by about 51% because it's a big jump. I'm asking you the question as to why, and if you can talk us through what this means for the next few quarters.
See, I think you shouldn't look at the tax as a quarter to quarter, but full year, I think we should remain at the 19 to 20% range.
All right. Ms. Prasad, then I'm going to sort of wrap this up by asking you for your view on where the business stands right now and what you expect the second half of this year will bring. You've given us some indication geography-wise and business segment-wise, but a slightly more macro, big-picture view on what this year is going to mean for DRL at this half-year point.
Yeah. So this year is a modest year. It's not a high-growth year, but the second half should be better than the first half.
All right. We'll leave it there. Thank you so much, sir, for joining us this afternoon on CNBC TV 18.